What's up, guys? I want you all to think for a second, how can you generate tax-free wealth for your kids? For most people, two primary vehicles are going to come to mind. The first one is a Roth IRA, and the second one is a 529 account. But here are the issues. First and foremost, most kids don't have earned income, so they can't contribute to a Roth. So that option is going to be off the table. The second option, a 529 account, can only be used for qualified education expenses. Otherwise, the earnings in a 529 account can be subject to ordinary income and a 10% penalty. And as a financial planner who works a lot with families with young kids looking to build wealth, I find that most families want to generate tax-efficient wealth for their kids, but they don't want to feel restricted to just use it for qualified education expenses. Well, today I'm going to break down how you can build wealth with a custodial brokerage account, completely tax-free. I promise you don't want to miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's content. And of course, if you need help creating a tax and financial plan for yourself, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So let's dive into it. A lot of people ignore custodial brokerage accounts, otherwise known as UTMA or UGMA accounts, because they think that the accounts are taxable, meaning that the gains you make in these accounts are taxable to you as parents or the child. But that's not necessarily the case if you play your cards right. So in order to play your cards right, you got to understand how Kiddie tax works. Kiddie tax is a special tax that is levied on a child's unearned income. So income like capital gains from stocks or dividends would be considered unearned income. Whereas income generated from working, let's say, as a sign flipper would be counted as earned income. Now, if you're wondering why the heck did I use sign flipper as an example, well, it's because when I was a 13-year-old kid, I was out in these streets flipping signs, advertising for businesses. It was my first job, so shout out to all the sign flippers out there. I see you guys. Anyways, so how Kiddie tax works is as of 2024, the first $1,300 in unearned income is not taxed. The next $1,300 after that is taxed at the child's rate, and anything above $2,600 is going to be taxed at the parent's highest tax rate. Kiddie tax is going to apply to any child under the age of 18 and adult children who are between the ages of 18 and 24 who are full-time students. So now that you have a high-level overview on how Kiddie tax works, let's show you how you can turn a custodial brokerage account into a tax-free vehicle. So let's say you open up a custodial brokerage account, otherwise more formally known as an UTMA or UGMA account. You put in $5,000 into the account and invest it in a stock. That stock appreciates in value from $5,000 up to $6,000. You now have a $1,000 unrealized capital gain. Now, what most people do is they buy and hold, especially in a custodial account, and just wait for that asset to grow. But what we're going to do instead is actually sell that stock to intentionally incur a $1,000 capital gain. Once we sell, we're going to reinvest the proceeds how we see fit. And the reason why we sold out and cashed in that $1,000 capital gain in the first place is, remember, the first $1,300 in unearned income, like capital gains, is going to be tax-free. And keep in mind, even if we have gains or unearned income higher than $1,300, we have another $1,300 of room to go at the child's rate, which for most kids is going to be extremely low. So in practice, what we do for our clients when we're managing a custodial account is every year we intentionally incur capital gains up until those limits, since it's an opportunity to essentially reset the basis in the account and generate tax-free wealth. So if this is a strategy that intrigues you, here are a couple ways you can customize this for your own financial plan. Number one, combine this strategy with a 529 account. From my experience, most parents don't mind using a 529 account, but they often don't want to put all the money that they're putting aside for their child into it so that it's exclusively for education. So if this is you and you're looking for a little bit of flexibility in how your child is able to spend, you can put some money aside in the 529, which will grow tax-free and come out tax-free for qualified education expenses, and then use the custodial brokerage account strategy to save for their child's non-education related expenses in the future, like their first home. Plus, keep in mind, if for some reason, if your child doesn't want to use all the assets in their 529, they'll be able to roll up to $35,000 to a Roth. If you want to see an episode on how that works, be sure to drop a comment below. Second consideration is if you're someone with highly appreciated stock in your own portfolio and you're looking to build wealth for your children, you can gift that stock directly into their custodial brokerage account. When you gift the stock over to them, your cost basis is going to transfer over to them as well. At that point, you can sell the stock in the custodial brokerage account. So let's say they incur a $1,300 long-term capital gain. If you incurred that in your own account, the capital gains hit could be as high as 23.8% plus any state taxes. Whereas if your child incurs that same gain in their custodial brokerage account, if that's their only source of unearned income that they have, it would be 100% tax-free. The last thing to keep in mind is that money that you put into a custodial brokerage account is considered an irrevocable gift to the minor that they will have unrestricted access to when they turn the age of majority, which for most states is going to be 18 or 21. It's rare, but I've literally worked with clients where they've set up these accounts and they end up being worth well over six figures, and the child is now 18. And let's say that child has a drug problem and they can't be trusted to spend that money. Well, unfortunately, you won't be able to do anything about it because once that money is in the account, you can't claw it back. Again, this is rare, but this is something that you need to keep in mind. So there you have it, guys. If you need help creating a plan to build wealth and save for your kids, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. I will see you next time.